Welcome to Thoughts on the Market. I'm Andrew Sheets, Chief Cross-Asset Strategist for Morgan Stanley. Along with my colleagues, bringing you a variety of perspectives, I'll be talking about trends across the global investment landscape and how we put those ideas together. It's Friday, August 27th at 2 p.m. in London. A number of tricky developments await investors for the month of September. As you've heard from my colleague Mike Wilson, Morgan Stanley's Chief Investment Officer and Chief U.S. Equity Strategist, these mean that we don't see good risk-reward at current levels in the U.S. equity market. But investors also have to do something with their money. And so in today's episode, I'm going to talk about an area that we do like. I'm going to talk about Singapore. Singapore might be a small country, but its size and governance have meant that it's one of the most successful vaccination stories in Asia, and indeed around the world. 74% of the population is fully vaccinated against COVID-19. That compares to 10% in India, 12% in Indonesia, 27% in Korea, and 44% in Japan. It's well ahead of the United States, where 51% of the population is fully vaccinated. Singapore is also well placed with regards to risk from policy and regulation. These risks have been rising in China recently, while the US will see September dominated by debates around infrastructure policy, tax policy, and coming shifts in Federal Reserve policy. Policy shifts in Singapore, in contrast, have generally been positive, with the Monetary Authority of Singapore allowing banks to raise dividends after they passed a recent round of stress tests. And we think the perceived stability of the country could mean that it benefits from inbound investment. In a world where many assets are expensive, the country also enjoys relatively attractive valuations. The valuation of its currency, the Singapore dollar, is below the 5-year average. And the country's stock market is still below pre-COVID levels and still down 14% from the highs of early 2018. It also screens well on a broader set of key metrics from our Asia and EM equity strategy team, one reason they continue to rate the market as an overweight. Like any investment, it's not without risks. The country's currency is seen as a safer, more defensive asset and could underperform more cyclical countries if optimism shoots higher. Its stock market, meanwhile, is heavily dominated by banks, which make up over 40% of the index. While we think this is an attractive sector to be exposed to, the concentration is a risk. Markets face a number of questions heading into September. We think Singapore offers an attractive place for investors to look for opportunities, given reasonable valuations, good links to global trade, high rates of vaccination, and less policy uncertainty. Thanks for listening. Subscribe to Thoughts on the Market on Apple Podcasts, wherever you listen, and leave us a review. We'd love to hear from you.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.